and welcome to the Small Business Tax Savings Podcast, powered by JETRO and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hello, listeners, and welcome to the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I'm a CPA and founder over at JETRO and Associates. As we get started here in tax season, I want to talk about some of the changes with the Tax Cuts and Jobs Act for 2018 and forward. So many of you might have been hearing some of these changes throughout the year, but now that it's actually tax time, this is when you'll actually see this tax law work being put into actual place. So I wanted to go through some of the changes with the new tax law and how it might affect you. And I'm going to start on the personal side, talk about a couple quick hit items, and then move to the business side. So the biggest first thing on the personal side is that the standard deduction nearly doubles. So the new standard deduction for married filing jointly is $24,000, and if you're single, $12,000. So what this will do, it'll result in many taxpayers no longer being able to itemize because the standard deduction is bigger than itemized, what the itemized deductions would be. So now that doesn't necessarily mean that the taxpayers will see a tax increase. In fact, due to that higher standard deduction, many taxpayers will see a tax decrease, especially if you didn't have a lot of itemized deductions to bring that up. As we kind of talk about the itemized deduction side, state, local, and property taxes can only be itemized now up to $10,000. Charitable contributions are now capped at 60% of income, up from 50% before. So you can now do more charitable contributions with the new tax law. And all the deductions that used to be subject to the 2% threshold, itemized deductions, are no longer available. So this includes tax prep fees, investment fees, legal fees, and unreimbursed employee expenses. So if you currently have a lot of work-related expenses that you paid personally but were not reimbursed for from your employer, this could be mileage, travel, etc., you will no longer be able to take this deduction as you used to in prior years. So it's a key note to think about there. So a couple other various smaller items, the healthcare requirement started in tax year 2019. So starting this tax year, taxpayers will no longer be penalized if they are not covered by health insurance. 2018, that penalty is still there, but not in 2019. Moving expenses, no longer deductible except for military. Like-kind exchanges, they are now solely limited to real estate. So any kind of like-kind exchange activity is solely limited to real estate now with the new tax law. Alimony for divorce agreements or renegotiations after 2018, so starting in 2019, alimony is no longer deductible by the payer, and it is also not income by the recipient. And then tax brackets. Rates have been decreased for most tax brackets. So look at what tax bracket you fall into and see where that rate might change. Now on to business tax. So this is really the fun part. As a small business owner, you will likely enjoy many of the changes in the tax bill. I'm just going to touch on some of the most important ones, and then later in podcast episodes, we'll dig deeper into specific topics to go in a little bit more in depth. The first one, and this is the biggest one for business owners, so listen tight, Section 199A deduction. This is a new deduction that can be taken on qualified business income. Now, this can get complicated depending on your business's situation. So we want to give a high-level breakdown, but if anything like this involves you, make sure to look into this a little bit more deeper about how it affects you specifically. So the Section 199A deduction is for pass-through entities. This would be a sole proprietor, an LLC, a partnership, an S corporation. You guys are all entitled to this. And what it does is taxpayers are able to deduct 20% of the income from that business, and that deduction is taken after the adjusted gross income on taxable income. Now, it's key to note that the deduction does not reduce self-employment. So you'll still pay self-employment tax on 100% of your business income, but you get a 20% deduction on taxable income of your business income. Now, there is a phase out. So for those of you that are married filing jointly, you might start to phase out once you hit $315,000 in AGI. If you're single, that number is $157,500. So keep track of those numbers. But just in general stance, if you're under that 315 filing jointly or under that 157.5 filing singly, keep that idea behind you that you'll be able to deduct 20% of your qualified business income and reduce your taxes. So that's a big tax savings for small business owners. Next item, bonus depreciation in Section 179. Businesses can now claim 100% bonus depreciation on any qualified property placed in service after September 27, 2017 and before January 1st, 2023. The new tax law also increases the amount that can be expensed under Section 179 to $1 million. So this is a big thing for those that are buying property and need to get those expenses in. Next, and this one is the big downside, entertainment expenses are gone. Businesses can no longer deduct entertainment, amusement, recreation, membership dues to clubs, etc. This is big. So taking your clients to a baseball game is no longer deductible. But the important part here is that you can still deduct meals. So if you take that client to a baseball game, the tickets aren't deductible. But if you have meals and drink and they're separate, expensed separately, then you can take the 50% deduction on that meals and entertainment. So just the entertainment piece. If you have any type of event that combines the entertainment and meals together, ask them for a breakdown on the receipt so that when you come to tax time, you are able to deduct at least 15% of the meals portion, just not that entertainment cost. So make sure that they can distinguish the difference between the two. Entertainment expense is gone. Meals and drinks are still allowed. Next item here, net operating losses. Net operating losses are now limited to 80% of taxable income, with the carryback period being eliminated. But now you can carry forward indefinitely. So net operating loss limited to 80% of taxable income within a year, no carryback, but you can now carry forward indefinitely. Incorporate a corporate income tax rate. If you're operating as a C Corp, the corporate rate is now a flat 20%, 21%. That is down from the previous 35%. So this was just kind of quick hit. Some of the major things that I think affects taxpayers, affect our listeners. These are some of the major changes in the Tax Cut and Jobs Act. Just to go as a quick summary again, on the personal side, the standard deduction nearly doubles to $24,000 for married, $12,000 for single. On the itemized deductions, again, itemized deductions will not be as useful anymore as they used to be for some people. Others will use itemized deductions just like they used to. State, local, and property taxes can only be itemized up to $10,000. Charitable contributions got a little bit raised, so you do have a little bit more that you're able to contribute to charity. And the 2% threshold, this would be unreimbursed employee expenses, tax prep fees, things like that, no longer part of itemized deductions. A few other things, starting in 2019, there's no longer a penalty for not being covered by health insurance. Moving expenses, no longer there except for military. Like-kind exchanges are limited to real estate. Alimony, starting in 2019, is no longer deductible by the payer, and the person receiving it also does not pay any income tax on that, and the tax brackets have changed. So just be sure to look at that. Again, summary on the business side. Big one here, Section 199A deduction. That is 20% of your qualified business income, as long as you're under the thresholds of $315,000 for those filing jointly and $157,500 for those of you that are filing as single. You'll get 20% deduction on your qualified business income. So this is a big help, big tax help for small business owners. And then entertainment expenses gone, meals still there, 50%, and the corporate rate down from 35% to 21% starting now in 2018. So again, these are just some quick hit things. We're going to dig deeper into these as we get going, but I want to get an initial, as we enter tax season, you're going to start to see some of these things pop up on your tax returns. You're going to start to see some of these issues arise in your personal situation. So I want to, again, bring it to the forefront, remind you of these changes so that you are aware of them when you start to doing your filing taxes and getting in there. Last thing before I end it today's episode is we also have a Facebook group called the Small Business Tax Savings. If you join that Facebook group, you can join other small business owners, and we can talk about, feel free to ask questions in there and we can communicate on some questions that you have. So feel free to join that group again at Small Business Tax Savings on Facebook. And of course, we'll be back next week and we look forward to seeing you then. Bye-bye.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.